This is market rally. So after 6 videos explaining my approach to daily bias, I want to have a daily example with this week GPU, GBPUSD price action. So this was previous week. You can see this was so this is Monday, previous Monday, not this week, the week before. Tuesday, high of the week. Wednesday, Thursday, and Friday. So this is continuation model. Then we started a new week. This is Monday. This is previous week high, previous week low. Okay. So this was a bearish candle. We have bearish market structure here. As you can see, we have bearish daily candle, price retraced and was taken by this obvious and extremely beautiful daily. uh, for daily weekly zones, I don't like to say order block, I like to say supply and demand. So this was a beautiful daily supply zone. Beautiful. Price retraced into it and rejected. So previous week high, previous week low. Yeah. So this is Monday. This is the previous daily candle. This video is about daily buys, not order blocks, so we remove this. So this is the previous daily candle and previous weekly candle. This is it. Monday, Tuesday, Wednesday, Thursday, Friday. Okay. So we closed here. We opened here. This is Monday. Yeah. So this is the week. And this is a week. This things. Think and then we have some issue. Okay. So we opened here on Monday. Okay. We have bearish market structure and the bearish weekly candle. So the general trend is bearish. So now we're gonna see what will happen. So price come all the way up, but couldn't take previous week high. Here, this is a very important thing that the sixth video was about is the previous daily fair value gap. So Monday, Tuesday. You can see here that price could not invert this FVG. So it went all the way up, but closes below it. So this FVG held, and as you could expect, price will continue down from this FVG, ensuring us our bearish daily bias. So all the way down. So we could not take previous week high, and we could not break. Yeah, this is very good week. Why? What we have here, it's a very good example because we have clear bearish bias. It's a good example because you can see how price could not invent a VG, and here we have the inside bar. So as I said previously in separate video, when we have inside bar in bearish context, we expect the third candle to. So this is inside bar. This is previous candle high, previous candle low. But as I said, this is the fake previous day high and low. The real range is the day before. So, but I doubt that price will go up here because we have this daily MVG from which price rejected. So I expect the price to take this high and go all the way down. As you can see, this is a weird candle. Yeah, this is a gap because it's supposed to open here. It's supposed to open here. So we have a gap at the opening. We took the high, went down. So this is not normal candle because the bullish candle should have started here. So all this zone should be a wick, but we have opening here, so it means a gap. We take previous day high, fake previous day high, which is we could not take the effective high because of the daily candle. And no, this is weird because this is a bullish candle. Because so if it opened here all the way up and way down, it should be bearish, it should be black. So the gap was here. We opened here, yeah. We opened here, went all the way up and closes down. So this is a weird candle after the golfing. Now we have our engulfing candle. So as we said, so we take previous day high and we closes below it. This is not perfect engulfing because we didn't close before the high, but we closed below the closure of the previous candle. So it's an average engulfing candle. Now we'll see if price would retrace to 50% the range before going down. Yeah, it retraced to 25% of this range, and we take previous week low. So it was Wednesday. See there was a candle after did. So how you can see, we took the low, previous week low. No, no, this is not accurate. This is not accurate at all. This is the low. Wednesday. So you can see we took the low with a great candle. That's Thursday. As we said, Friday, it's the week of the weekly candle, it's the tail of the weekly candle. We're expecting a reversal. So as you can see, price went bullish, and we have a blue candle or green candle. Depends on the. So we can see here how the bias was bearish and it was confirmed here. You see there how the bullish position and the long position were short-lived, were brief, but the big moves and the most beneficial move with biggest profit, the biggest risk reward, were the short position. And at the end, we saw how in Friday we make small reversal to print the wick of the daily weekly candle. So this is the weekly candle, and this week is Friday. So low of the week was Thursday, and this move up was Friday candle. You can see and we go daily candle. Yeah, you can see this move up is more or less the daily candle. So it's a good example because it's rarely that you're gonna see a perfect week with reversal or continuation model. It's always the price coming to mid-range, rejecting on daily NVG, going all the way down, making inside bar, making a messed up candle like this one, because this is bullish candle. It's supposed to open here, 12 all the way back and closes, but it opened here, so we have a gap down. So I think this is a good example, and you get more or less an idea. So this is it. This is our tool, my approach for daily bias. You can apply it on your own trading. Thank you for watching.